Big oil capping off a big earnings week. Exxon, Chevron, and Shell all reporting first quarter results this morning. For more on the energy sector, we're bringing in Rob Thummel, Senior Portfolio Manager and Managing Director at Tortoise Capital. Rob, it's good to see you. It's so fascinating, the energy sector, because the hopes were high for the sector coming into the Trump presidency. But it hasn't turned out quite so great, especially if you look at oil prices. So just briefly, when you look at the three that reported today, what stands out to you and who do you think is sort of faring the best?
Yeah, well, it's good to see you, Julie. So you're right. So the energy sector's has had high hopes, but remember, it's still really important. There's nothing really that happens in the economy without energy. But to answer your question, Exxon had a really good report. It's not performing the best as you just showed on the list, but Exxon continues to be, at least from the big three, probably best positioned to really persevere through what are going to be some difficult, maybe economic times, at least uncertain economic times, and some uncertain commodity price periods. And so Exxon's really well positioned. They continue to buy back stock. They bought back 1.6 times the amount of stock they bought back in the same quarter last year. They continue to pay a really good dividend. They grow that dividend every year. They've done it for decades, and so they're probably the best positioned to be resilient in these uncertain times.
Rob, what about Chevron and this Hess deal? How is this going to play out?
Yeah, Josh, that keeps going, doesn't it? We keep talking about it. Hopefully we'll have some resolution this year on the arbitration. It's really difficult to figure out how it's going to play out. Mike Wirth seemed to be pretty confident that it's going to play out in their favor. You probably saw that, or that actually Chevron bought 5% or 4.99% of Hess stock during the quarter. And so I think Chevron believes that they're going to prevail, and that ultimately that they will be the owner of Hess sometime in 2025.
In the back end of all of this is the OPEC Plus meeting that's going to be happening, and there are some concerns that production is going to be boosted, right? And this at a time when we already have seen oil prices come down amidst the trade war going on, concerns about demand. What do you think is going to happen there, Rob? And then what does that mean for these companies?
Yeah, lots of uncertainty here, and I guess that's what 2025 is. I guess the year of uncertainty, and it's carried over, spilled over into the oil markets. So what's OPEC going to do? OPEC Plus going to do? Hard to tell, but the expectation is, and I think our expectation is, that they will add an additional 400,000 barrels a day back to the market. So that's in addition to the 400,000 that they just brought on. They'll bring another 400,000 barrels a day on. I think what OPEC Plus is trying to do is they're trying to get compliance with the group. And everybody back to the agreed upon production levels that they agreed to actually years ago now. And so I think we will have an oversupplied oil market for a while. That's going to put pressure on prices. Now, the cure to low prices is, well, it's low prices. This could help boost economic demand for oil and for gasoline. And hey, by the way, this is a great thing for consumers, because gasoline prices are going to be going down into obviously the strongest season of the year for driving. But
doesn't it also mean that if prices are going up for other stuff and prices are going down for oil, could it be that people don't then drive more because they just see it as a way to save some money because they're spending more in other places?
That's possible, Julie. But remember, oil is kind of sneaky in that it's a product that's used in a lot of consumer products as well. And your premise, it could be accurate, and it likely will be better than mine. But oil is actually used in a lot of other consumer products. So if oil prices just come down in general, it actually helps inflation in a positive way, or helps reduce inflation in a positive way, more than just at the gas pump. It's in other consumer products as well. So that could help going forward as well, and keep prices lower. That's kind of what has really the U.S. shale really helped keep consumer prices low, not only just in the U.S. but around the world for decades, because of the fact that the U.S. found all of this new oil, and oil prices have been relatively low for a series of years, despite some spikes that we've seen.
Rob, President Trump likes to talk about drill, baby, drill. It's a mantra. Do you expect, Rob, to see a meaningful pickup in domestic production given where oil prices are at?
Well, from a macro perspective, Josh, we do expect the U.S. to continue to be the largest energy producer in the world. The U.S. has had been in that position for a while. We do expect the U.S. to continue to be the largest energy exporter in the world. That's on the long term. In the short term, actually, we may be going the opposite way. With oil prices approaching $50 or being in the 50s in the U.S., I think you're hearing a lot of producers say that they are looking at, they're reevaluating really their capital expending programs. Right now, they're kind of holding them steady, so that might result in a little bit of production growth. But companies like EOG actually reduced their capital spending just a little bit. That means their growth won't be quite as much. In fact, they may decline a little bit. So if oil prices go in the 50s, which is where we think they're going to go, oil demand or oil production growth in the U.S. is going to stall and be flat and may even start to decline a little bit.
So does that then also provide a bit of a floor under oil prices?
Yeah, we think so. Yeah, we think so, Julie, because for that reason, like you said. So basically, oil's got to find a floor to get supply and demand back into balance. What $50 oil tells you is that the oil market's oversupplied, and there's too much supply. So we think, to get that market back into balance, you see less production from the U.S., possibly more demand because of increased driving activity and other consumer and economic activity, and that'll get oil back into balance, and we'll see oil prices come back into the 60s at some point. That's probably the better long-term average, is $65 to $70.
Rob, good to catch up with you. Have a great weekend.
Thank you. You too.